Hello, this is Sam Limo, your Texas Realtor. And today in this video, I'm going to be addressing the 1 to 4 contract. Congratulations for coming this far and for taking the 5 steps for us to be able to have identified the home. We found the home, we did the tours, and now you are here trying to study and understand what you're about to sign. So welcome, and I'm going to go over the document. All right, as you can see, this is a 1 to 4 family residential contract. I'm gonna go over the details of it. On number one, it will either give you the name of you who is buying and the name of the sellers. So it will be the contract between you and the seller. On number two, it will show the address and the legal descriptions of the property that you buy. On number D of number two, it will show the exclusions of what does not come with the house. So if the fridge is not coming with it, it will be written right here. So always pay attention what is excluded out of the contract. On number three, this is the sale price. The sale price has A, B, C. On A is the amount, the cash amount that you bring in with you. So if you're financing on an FHA loan, minimum 3.5%. If you're financing through regular convention, it can be anywhere from 3% to 10%, whatever amount, it will be put on A. B basically shows if there's an extra financing. So if it's financing to the bank, it will be third-party financing. If you're assuming a loan, loan assumption addendum, or if it's a seller financing, it will be shown right here. So that's B. On C is the sum of A and B. So the total amount that you agreed to buy the house with will be on Schedule C, 3C. So pay attention to that amount. If there's any leases to be disclosed, it's going to be show up here on number 4. And number 5 is also the most important part because this is where you have to understand that, okay, to be in contract, you have to pay your owner's money within 3 days from the day that the contract is executed. So this right here shows who we're paying the owner's money to, how much the amount is, and also the option money. Okay, so the option fee, so there's two different payments here. You get the owner's money. Let's say you pay $5,000 to be in this contract, and then you get an option period whereby you pay for a couple of days. Most of the time here is about 5 to 7 days, maybe about 350 for the 7 days. So let's go in that scenario, 350 for 7 days, which means within the 7 days, you're gonna decide completely if you want to move forward with this contract. So what happens between the 5 7 days is you go through inspection, you inspect the house, make sure there are no issues. You go through if there's any things to be fixed. This is the moment to negotiate with the sellers to make sure that you're in agreement with it. And if within the 7 days you don't agree with them, then you have risked only the 350 and you get the $5,000 back on your honest money. So that is what that is right here. The option fee is what is listed and also your honest money. Where the termination of the option B will be right here on B. So if it's 5 days, it will be reflected here. If it's 7 days, it will be reflected right there. So pay attention to that. All right. On number 6 is the title policy and survey. So who do we on a contract, we will also talk about who is paying for the title policy. So as you can see, it will either be paid by the buyer or the sellers. So pay attention to that and to be issued usually by the escrow company that we already stated on number 5. And then also if there's any amendments, it will show here that you want it to be amended and who is going to pay for the amendment. So buyer or seller, pay attention to that. Okay, the survey, we always request for a survey. So we're gonna stipulate who and by how long do we need to get the survey from. So pay attention to right there. If there's any objections, it will be written right there. And let's keep going. Everything else here is important, but there are some areas that I really want to pay attention to. So on number 7, this is property conditions. You're buying as is. There's also the requirement to have a seller disclosure. So there's a separate sheet that we're gonna say either we're gonna be waiting or we already gave it to you. So most of the time it's provided. So we'll have to check here. If we haven't received the disclosure, we give them within how many days do we need. Usually we try to get that disclosure before the option period is done. So you will see here, if I say option period is 7, I need it within 5 days here. All right. We keep going, property as is. All right. If there's any relationship between the agent and the sellers, it will be disclosed right here. Number 9 is your closing date. Usually, when do we want to close by? So this is where we're going to put it on number 9. Okay. Possession, we want to receive it upon closing and funding, or if there's any leasing, temporary leasing back, we will have to show that. Okay. Number 12, this is the most important part also. So here it talks about the settlement and other expenses. As you can see, it says seller shall pay the following expenses. Seller expenses. There's A and B. And then so on B, it says the following amount to be applied to broker fees that the buyer has agreed to pay. So if there's any commission here to be paid by the buyer and everything else, it will show it up there. On Schedule C, an amount not to exceed this is to be applied to other buyer expenses. So if I'm negotiating with the sellers for them to pay closing costs for you, so this is where I put it. So it will show up here on 12C that this is the amount that the seller is paying the buyer expenses. So it will show up on 12C. All right. To explain here progressions, everything else is self-explanatory here. Just read through it. And then all the documents that I send with this document, I will check the list here. Okay, so some of them is basically mandatory membership in owner association. So if it's HOA, it will show up right there. If there's buyer temporary lease back, it will be there. So all these documents, what I'm sending, third-party financing addendum. So basically, if we have a third-party addendum, usually we request that this contract is contingent of your financing basically going through. So that's why we will stipulate that on that document, third-party financing, okay? So those are the checklists, the date that they executed. So pay attention to this because this is whereby you have to pay your owner's money within 3 days of the executed date. All right. Another part that we got to pay attention is right here. So this one right here is disclosing the agreement between who is paying and how much the sellers are paying to the other broker. So what happens is during a listing agreement, the seller and the agent will agree how they want to sell this house. They will negotiate whether they're going to pay the buyer's agent money as part of the seller's agent advertising to make sure they get the qualified clients. So if they negotiate anything like that, I will call the seller's agent. And if there's an agreement between them that they're going to be paying me as a buyer's agent, that amount is shown right here. So as you can see, it says listing broker has agreed to pay other broker a fee of this percentage of this amount. This disclosure is for information purpose and does not change the previous agreement between brokers to pay or share a commission. So this is where it will be shown. All right. So I hope this helps, and I hope you get a good understanding of the contract. Otherwise, congratulations for coming this far, and we look forward giving you the opportunity and to give you the big key. This is Sam Limo, your Texas realtor, and I'm excited that you made the decision to be a homeowner, and congratulations. Be blessed.